next presentation is Cost-Effective Research and Development by David Beneke from DB Consulting. David is a senior structural engineer with specialist skills in finite element analysis, FEA. His 20 years of consulting experience, which has mainly been in the areas of FEA and product research and development, is underpinned by bachelor and master's degrees in structural engineering at Sydney University and membership of the National Professional Engineers Register for Structural Engineering. David is currently a director of his newly formed firm, David Beneke Consulting, and is also a registered analyst, advanced, with NAFAMS, the National Agency for Finite Element Methods and Standards. David takes an active role in the association and is currently a standing member of the board. We'd like to welcome David, please.
Well, thanks very much for having me today. The topic of today's discussion is cost-effective research and development. Now, most of you who have known me from previous, I mainly get into the finite element type work, but today's discussion is more on the research and development work that I've done for quite a few Australian companies that you can see on the bottom left-hand side of the screen. Now, it consumes around about 25% of the work that I do, and so what I thought it would be a reasonable thing that if I actually brought to the conference here some of the things that I've learnt from these clients in terms of how they actually run their R&D systems. So there's three main topics I want to go through today. First of all, how and when to actually implement the technical aspects of the development of a particular product. So that's the first thing. Second thing is just to go through some basic rules of thumb in terms of how to actually develop a product. And the third thing, of course, which is mainly for Australian-based companies, is the initiatives that have been put forward in terms of R&D tax concessions and where you can actually get tax credits for some of the R&D things that you do in your business. So just in terms of the first thing, which is mainly that when to apply the actual technical aspects, there's three assumptions that I'm going to assume that all of you have done if you're actually going to develop a product. The first thing, of course, is that you have identified that there's a type of product that you actually want to sell into a market. The second thing is that you've established that there's actually room in that market, or maybe there's not even a market at all, which is a good thing, that you can actually sell that product into. And the third thing, of course, is the fact that you've already identified what the actual cost per item will be that particular market can bear. So they're the assumptions for the discussions in terms of the technical input. So the technical input, really, it comes down, you may get that from engineers, you may actually get that from scientists, depending on what the technical aspects of the thing that you're trying to develop. And of course, in some instances, you may actually do some laboratory testing as well. So the question is, when do I actually start putting the technical input into the product that I actually want to develop? Well, the basic thing that is gleaned from all of the companies that I do work for is that you must start early. In fact, it's probably one of the first things that you actually do. And to give some sort of qualitative data to that, this particular curve that's in front of you at the moment, it's commonly called the Boeing curve in sort of R&D sort of areas. And it basically relates to, on the bottom axis or the horizontal axis, you have time. So let's see if I get this laser right. There we go. So you've got time on the bottom axis and the relative cost to actually change the product. So for instance, if you've got to make a particular change to a product because you're actually bounded by some form of technical aspect, the cost to actually do that is on the vertical axis. So in a lot of instances, you see a lot of people doing this. They don't spend too much time on the product initially, trying to develop it, and they just creep along, and every iteration they go through and they actually change things, it costs them more every time to do it until they get to the point where it's just like, well, I've now got my engineer to actually come in here at this time, and he said to me the product is absolutely knackered, so we've got to start from again. And as such, the cost to actually change that product at that particular time is enormous. Whereas if you go back at the very beginning and you spend quite a bit of time and resources getting your engineering and your technical parts right first, every iteration in the design that follows, the associated costs with that decreases to the point where you could almost ring up your engineer and say, look, we wanted to make this minor change, is that okay? Can you send me an email? And it doesn't cost you anything. So the most important thing is, although it's a bit of a pill to swallow, initially get your technical input done first. Okay, now with respect to that technical input, it's usually like a large bunch of cash that you've got to go and shell out. So one of the most cost-effective ways to be able to deal with this situation is to do a two-staged approach. The first stage, it's a bit like, well, am I actually in the ballpark? For instance, if you've seen many an example where someone's done some calculations basically on a napkin in a restaurant, and they can work out whether or not you're actually in the ballpark or not for what you want to do. Now, that's one extreme, of course. The other extreme is where they've got to do some calculations to determine whether or not what you actually want to develop is actually in the ballpark or not. Now, typically this first cursory examination stage usually costs around about 10 or 20% of what the total cost to actually develop the product in terms of the engineering or technical aspects. So it's a good way to actually feel the water and say, all right, well, am I in the ballpark? If you're well in there, that's great. If you're completely out of the ballpark, you know to stop and go on to a different product, because that particular one won't work. So that first stage evaluation, it gives you the ability, and I'll just coin a phrase, pull the pin. It enables you to actually decide whether I should proceed or whether or not I should pull the pin. So the final assessment, or stage 2 of the technical involvement, basically includes a full technical examination of what you're doing. So for instance, with a rotomolded type product, you would actually go through all the engineering aspects of it, making sure that that particular structure conform with all the appropriate standards, and then from there you would then get a certificate for that, and from there you could then start looking into actually creating moulds and that type of thing. Now, the advantage of the two-stage process is that by going through stage 1, you've actually limited your risk a bit, because you've already pre-evaluated whether you're in the ballpark or not. If you went straight to stage 2 and, let's say, spent, I don't know, something in the order of $5,000 or $10,000 on evaluating, let's say, a complicated underground tank, for instance, then you might get to the end of that and they turn around and say, well, you weren't in the ballpark to begin with, so I don't know why you spent the money. Whereas that two-stage approach, it just gives you the ability to really get a good feel as to how the product is actually going to fare in terms of whether being in the ballpark or not. So now I'd just like to go through some general rules of thumbs. Now, this is particularly the case for some of the larger R&D companies that I do work for, particularly James Hardie and CSR. I think one of the most important things is you have to set a reasonable budget for your R&D. Now, the question is, if you're in a currently depressed market as it is at the moment, well, how do you do that? Well, the thing is, you can't do it now. But when things do get better, and they naturally will, is that you just got to put money away for your R&D. So that when it comes to the next cycle in which things aren't as good, at least you've got some cash to play with to develop new products. To give you a bit of an idea, although 25% of my work is this R&D type work, I am at my busiest when my clients, when their markets are at their worst. So it's completely counter-cyclical. So when their markets are decreasing and they find that they're just not selling as much product, they try to broaden their market by introducing new products during the time in which the markets are going down. Second rule is don't get emotional. And I think everybody probably recognises, yeah, they want to get rich on their idea and that's all wonderful and things, but getting emotional, unfortunately, doesn't generally lead to good decisions in terms of doing R&D. And the problem is with R&D, you can spend bucket loads of money on it and not get anywhere. But if you're at a stage where you're making your decisions based on your financial calculations, your technical advice that you're getting from your advisors, then you can make good business decisions. The third thing is, this is where you've got to have an active involvement within trying to work out, as you're getting your technical advice, you're constantly updating, and as you can see there, can lead to disaster. You've got to be constantly updating what you think you can actually sell that product for as it is currently designed at that time, and continually update that. Now, if the product price at which you actually can sell the product for is greater than what the market can bear significantly, well, you pull the pin. But if you're still within a reasonable bound and that you can sell the product for a reasonable price within what the market can bear, that's fine, you continue on. So, R&D tax concessions, as I mentioned before, this mainly affects the Australian companies here. Now, I'm not sure what happens in New Zealand and the remainder of the companies within the Asia Pacific, but my guess is that they may have tax incentives with respect to R&D, and it's something definitely work into. So, but as it is, this is the what's required in terms of the Australian system, and it certainly can have some benefit. It's an Australian government initiative, and of course, and it's administered by Innovation Australia. It allows Australian companies to receive tax credits for doing R&D work. So the first thing is what's actually claimable. Okay, now in terms of what's claimable, it's any activity which is innovative or new, which includes, now the first one, which is any new product development. I think that's fairly obvious, we all recognise that. But the second thing is in the development of a process. Now, for instance, I think Garth Galloway, when he did last year his presentation on foaming, okay, if his company was in Australia, all the time that was spent in terms of developing the process associated with creating that product as R&D tax claimable. Similarly, let's say, for instance, if you had something wrong with one piece of equipment, let's say an oven or something like that, and you developed an innovative way to be able to solve that problem, then that's R&D tax claimable as well. Even though you're not actually developing a product or anything like that, you've just created a new process. And again, as long as you keep the records, that's claimable. The other thing, of course, which is claimable, is any activity in which there is a technical risk involved. And I've just given you an example here. So if a moulder wins a tender to mould a new product that they've never actually moulded before, the start-up costs associated with getting the moulding right for this particular product is R&D tax claimable. You just got to keep the good records. So it's anything that you don't quite understand or don't quite realise what the actual involvement's going to be. So if it's a complicated mould and you don't, with kiss-offs everywhere, and you're not quite sure what's going on, and you have to go through a few iterations of moulding to get everything right, well, in that circumstance there, that whole time, as long as you keep good records of what you've actually done, you can claim it as an R&D tax concession. So once you actually make a claim under your R&D tax concessions, those tax credits apply then for the next financial year. So for instance, if you make, let's say, you get $10,000 worth of tax credits in this financial year, when next year's profit comes out, and I'm hoping that you're all making a profit, of course, you can then use those tax credits against that profit to then reduce the amount of tax you have to pay on that. Or alternatively, what you can do as well, and this is, I'm not sure about this, but you can use the tax credits in circumstances that if you're making a loss, you can actually get the money back. Now, that's something you want to have a chat to some of your accountants with. I don't particularly do it that way, but I know that in certain circumstances you can actually get like it's a negative tax for some reason. Anyway, have a chat to your accountants, which actually leads me on to my next thing in terms of what do I actually do to take advantage of this. The first thing is you need to have a chat with an accountant that actually has some experience in R&D tax claims, and I wouldn't necessarily go to a general accountant in that circumstance. I'd go to a specialist, and although they might be a little bit expensive, for instance, I do my own R&D tax concessions for the work that I do, and typically they charge anywhere between 25 to 30% of the net gain that you actually make out of this thing. But I can tell you that even though that is, in some circumstances, you would consider that quite a lot, the net gain you actually get from that 60 or 70%, does make actually a big difference. So the second thing you've got to do is create an R&D tax plan, and the accountant who you actually deal with will actually assist you with that. And the third thing is that you've got to keep good records, and that if you know certain people are involved in what you would consider to be claimable jobs or processes or whatever, you've just got to communicate with them and let them know that if they've spent 3 or 4 hours doing a particular thing which you know is claimable, you've just got to write it down, give a description to it, and as long as you do that, you can then get some benefit from it. All right, well, that's all for today. I hope you've got a little bit out of that. I think we have maybe a couple of questions. Any questions there at all? No? Excellent. All right, well, thanks very much for your attention today. I hope you enjoy the rest of the conference, and thank you very much. Good.